You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting our grain market conversation as we always do with what are futures looking like?
Still moving pretty much sideways from where they've been over the last 2 to 3 weeks, not displaying any strength to jump to the high side out of most recent trading ranges. On Thursday on the 1st, the corn futures contract for March 24 closed at 447.5, and we've been around that same level for a few days. Had closed below 440 for a little bit, so pretty much heading sideways, I think, until we get some confirmation of some either better or worse information in such things as the upcoming February the 8th, I believe, USDA WASDE report. That then it seems that this is kind of where we're at. And for the new crop D's corn 479, and as opposed to 447 and a quarter. And in where that's critical is in regards to crop insurance. I think we've entered now in February, the month where we're going to average daily closes of the December 2024 corn contract. That'll affect both corn and sorghum planning prices for revenue products for crop insurance. So it's an important time, and we starting out that at on day one at that 447, at that 479 close. So we'll see where that goes. For wheat, we ended up and closed yesterday at 620 and 3/4. And again, after getting down to about 580, 590 thereabouts, one time in the last 2 weeks, we've come up out of that, and now are have apparently settled into something around 620, 630, 610 thereabouts. And we look out the window here in western Kansas. We see pretty good weather. We'd had moisture. I don't know what will change a lot until we get into breaking dormancy. Now the weather's pretty warm, and that would have some folks be thoughtful about that, and not wanting to get growth going and then have something come in latter part of February and into March. I'm sure our agronomic colleagues have talked about that or will with that risk. But as we sit right now, still same scenario for wheat. Pretty much challenging exports on the hard red side, and hard red spring had a little better week this last week than it had been, but we've struggled in the hard red side of hard red winter wheat side of the export ledger. And for soybeans, closed on Thursday at 1203 and a quarter. New crop November at 1185.5, and again your for soybeans as well as for the feed grains, that we're watching that November contract price daily closes to get some idea of what the crop insurance base levels are. And we might talk about this later if you want, but we actually had not too bad of an export week for the week ending January 25th. Again, 35 million bushels, need a pace of about 25 to meet the USDA's projection. So we had that, really not too bad of news, but also a news story that came out that talked about some very, very low price soybeans from Brazil coming into the country and coming into the United States. So as you and I talked before we came on the air, I don't know if we pardon me, unless there's follow through and it becomes a significant issue, and there's enough quantity to affect things. Is this a shot over the bow event to just remind markets not to get too high, although they certainly haven't been, or will this be an ongoing situation? We've talked about imports of European wheat into the U.S. and that we saw a little bit of a change in supply demand balance sheet. So the quantity is not that much, but the psychological impact and the threat of it happening certainly affected the wheat market, and we'll be watchful to see if that happens in the soybean market too.
And what are we seeing on the cash side of things, Dan?
Um, Surprisingly, as the futures have come down on for corn, we really have pretty good basis levels across the state. They're the best, of course, is 20 over in the Garden City area, our demand center, but really everything else ranging from 5 over to about 4 under. So that to me is indicating that yes, the futures may be low, but we're not seeing a collapse in basis at the local level. And what may also be happening is that farmers are loath to sell at these price levels compared to what they've just seen, and they may just be pretty tight and holding on to their grain. So we'll see what happens there. Pretty similar situation for grain sorghum in most of the states except the southeast corner. We seem to have pretty strong prices. Just amazing when you look at the South Central Kansas, you've got 1 or 2 bids. There's one bid at 497, and you go back and check, is that really there? But it was, as I checked it, 497 in the Hutchinson area. Salina, there was a 477. So still either grain sorghum exports happening now, or they're collecting grain sorghum to sell to fill trains or something. So you do have those bids, and then generally decent bids with positive basis, more so than a little stronger than corn actually in the Colby, Topeka, and Garden City areas. So interesting to watch. I would say also, as we mentioned, cash markets, a lot of variability also in soybeans. Still, again, the Hutchinson basis bid at 20 under, the strongest by about 30 cents well, by about at least 25 cents of basis bids around the state. And well, as I look closer, I guess if Hutchinson's 20 under, you've got Topeka at 35 under. So I guess it's 15's the next strongest one. And for wheat, as we've been bemoaning our situation in the wheat market, we do see a couple bids right at 601 at these key markets, the very top bids. That'd be in the Salina and Hutchinson markets, and those are 20 under basis levels. But other bids, you've got Topeka at 596 at 25 under, and out to the west between Colby and Garden City, we're at 55 to 75 under. So very thought provoking as to what all this is showing. It's not a sterling time of strength in the grain markets. We're not looking at any risk, any production risk, any planting risk, anything coming in and affecting that would come from the United States side of the ledger, affecting these markets at all. Frankly, aren't seeing a follow-through verification of reports of risk in South America. In fact, if anything, the rainfall reports are kind of going back and forth and mitigating some of the strength. So, so as we are talking with Kansas ag producers and wondering what analysis we would give, we just say, well, it's the season. I guess it's February. We just it's prior to anything happening for us, and if there's not a crop problem emerging down the south, well, we're just kind of treading water is maybe a way to put it. And at least right now, we're treading water going sideways and not further down.
And Dan, as we're thinking about this grain market, why might producers want to be looking at put and call options for old crop storage and new crop pricing?
We do get those questions, and in the corn market, let's say someone needs to generate cash and are wondering, well, if I would sell grain either in on-farm storage or in commercial storage and bought call options, how much would it cost me? Well, just quickly looking at July corn, and you have to get out July and June. So, that would catch the planting season, and at the money, $4.70 call costs about 22 cents. So what does that mean? Well, if you're paying commercial storage at 5 cents a bushel a month, that's 4 cents. You know, that's 4 months worth of storage, but then you're leaving the futures in the position to move higher. So that's a possibility. I would also say on the soybean side, let's say you did the same type of thing, and instead you're looking at August options, so you get further into July, and so right now, if you and at the money, 12, that's right. That's my 12.20 call option for August soybeans would cost 59 cents. So and you know, the corn number at 5 cents a bushel a month for 4 months, that's one thing. To buy that, to look at that 59 cents, put you in a position of basically having to have from 12.20, you'd have to have futures rally about 60 cents to be to 12.80, 13 thereabouts. So if the market goes sideways, you're losing money on that, but you'd be in a position to benefit if things really go higher. So as anybody listening can tell, there's both pros and cons to some of these strategies, and I guess as we go off in the future, we'll start looking more at what the price of put options are for corn and for soybeans and for wheat, and kind of what that's indicating that the psychology of the market is in terms of how low from current price levels they might go, and based on what they would make you pay to buy the price coverage from them.
And rounding out today's conversation, Dan, wanting to mention an article that you've included in this week's grain market report involving icy weather in the Mississippi River and issues it's creating.
Yeah, in the Mississippi River system, there's an article out of the USDA Ag Marketing Service Grain Transportation Report came out yesterday, February the 1st, about icy weather stymieing barged grain movements in the Mississippi River system. So if we had a situation where the world market suddenly got surprised by what's happening in South America, and they really needed beans, if they were beans or corn, and they were coming to the U.S. and we could not move quantities, adequate quantities downriver, down to New Orleans, down to to the Gulf, well, then it would bring pressure back to the rail system. And in that, I think we've seen in Kansas that if we can't pull grain out of the central and eastern corn belt, well, what grain we have here in these western states, and a little bit shorter rail service, that may help us. So I don't know that we've seen anything that we'd call positive yet, but that's something to watch, particularly if you get the situation where again, South American supplies are shorter than thought, and that's still a legitimate possibility. We'll see what the USDA reports say, and as that Mississippi River and up in Illinois and Iowa, etc., freezes up, but can't move grain that way anymore, then in Kansas, we need to be watchful. That could give us some opportunities.
Dan, I appreciate you taking the time once again to give us our grain market update for this week.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you ahead.